Hi guys, this is Simon with ToughTrader.com doing the trade review for Monday. It is 10 o'clock Monday evening, and I am up late because I crashed after the market. I think I'm still tired from last week. And what an incredible recovery in NQ and ES. I think this is one of the best bounces I've seen in 20 years of trading, and just a real impressive move up. Really painful if you've been fighting it, really profitable if you've caught it to the long side. And so I want to jump in and see what we can learn from today and see how we can improve. So quickly, before we get started, I have it hiding here. Past performance is not indicative of future results. Look, this is what this message is saying. You can lose a lot of money trading futures. I'm no guru. I don't have all the answers to trading. I have a lot of them, but I don't have all the answers to trading. And every good trader, particularly if you're a day trader, you lose money sometimes. That's just how the deal works. There's nothing you can do about it. It's got to be anticipated and part of your process. Don't let it set you on tilt. So many guys start losing money and they go on tilt taking trades off plan because they can't let their edge develop over a series of trades, and it's very painful, right? I'm guilty of it. Almost every guy that I coach one-on-one, every single trader I know is guilty of it at some point in their career, and we kind of ebb and flow. The point is to catch it as soon as you're doing it. Reach out for help. Have someone that you can confide in that will let you take you off that process. Most importantly, past performance is not indicative of future results. But essentially, I'm sharing my trade plan with you and how I look to improve for the following day so I can get better. So I want to go to the highlight of the day before we get started here and jump in and just show the Russell trade has been so money for us. Randy, who's one of the members in the room, has told me, he goes, it's hands down the highest winning percentage trade, period. And you will see today we only had one white zone that hit, but it was total money, 1544.40 to 1543. And technically, if you held it long enough, which I didn't, 4 points was all that I had in it for myself. But if you held it long enough, you literally ran from 1544 and we closed out at the high of the day. Wish I could have said I had the wisdom and foresight to hold that location all the way back up. I didn't. But day after day, the Russell zones, the white zones are what we pay attention to in the room. I've been total money, and I intend to continue to pull money out of them at those locations. Okay, let's jump over to ES. Now, you got to remember the zones are the last piece of the puzzle. So I want to pull the first piece of the puzzle in. The zones tell me where I want to get location. The zones come based off of the profiles, the TPOs specifically, in the volume profiles. So this is ES coming into the day, and just like I preach over and over again, preach is probably a word I don't like, but I think it's probably accurate, right? When you open up, the first thing I would have noticed today is that we are over every single value area in our neighborhood, right? Secondly, and most importantly, we are above the value area high. We're above the value area high from Friday. And what that tells me is one thing and one thing only. We are not short. There's not even a remnants of a big extension to the downside unless I get below 27.30 and a quarter. How does that help me strategically? Immediately I'm shifting to my short trades are scalps, and they better be damn well placed. And my long trades, I want to try to push those trades. Although I got to tell you, for the most part, I failed on the long side today because I did not get my entry, particularly in NQ. I just missed. I whiffed. I got the short right. I got the long wrong, I guess I would say, because I never got filled, would be the best way to put it. Even though I was at key location, it just didn't come back and tag me in. A little disappointing, but that's all right. We'll cover that in just a second. So the next part that told me, this is Dalton's gap fill from Mind Over Markets, 27.50 and a quarter. That's where I really wanted to get aggressive, between here and 27.45, and we just never got into the area to take it. I imagine the first time to 27.50 and a quarter to 27.45 and a quarter, we'd probably find an attempt. And at this point, this is the gatekeeper to come back and retest the value area high from Friday from 27.30. So that's good information, right? If you don't get below 27.45, there's nothing to do there, right? And really, when you saw us gap up, right? So there's a couple of rules that we follow in the room. First of all, if you don't fill the gap in the first hour, whether it's Dalton's gap or the market settle gap, If you don't fill that in the first hour, it's unlikely to fill. Number 2 point, if you don't fill it in the first hour, the most likely result of this happening, not every time, but a great deal of the time, is that you end up pushing out. So what you're hoping for is a test in, but failure to do it almost always results in a push out. Why? What does that information tell you? There was not enough motivated, aggressive sellers to even get us back to retest Friday's high and or the settle price from Friday. And that meant inherently that sellers were weak and buyers were strong from an aggression, non-aggression standpoint, right? So next, now we roll over to what we got intraday. So if we come back to this chart on ES, right, first thing you'll notice is we gap up and we push up towards 2765. It's a pretty good extension. And then you'll notice the grind down. But I want to point out 2 things. First of all, notice the size of the up bar versus the size of the down bar. And I was actually short this morning based on what NQ was doing. I figured we were going to come back in. And so my philosophy was this morning, even though we gapped, particularly early in the day, was that we were going to come back in and fill Friday's high and or the gap fill and or retest the volume point of control. That was my thesis. It probably colored my day incorrectly, but that was my thesis nonetheless. Once I got underneath this particular bar, usually I look to get underneath my last best buyer. I had to modify that to getting underneath my last bar that posted to the high. And the reason for that was if I waited to get underneath my last best buyer, the trade still worked. You'll see that was here to here, and the trade still worked. But my stop would have been so enormous on that trade. The size of the initial bar was just too big. And so I audibled on that. So people were wondering why I shorted once we closed below this bar. And the reason for that was I could handle the stop on this particular trade. And I thought I still had, when this occurred just prior to 9 a.m., and my trigger actually didn't come till over here. So it was just after 9 a.m. I thought that I had a reasonable chance of getting into Friday's high. And from that location, I had a good RR to the downside, and I had a reasonable stop above. So that was the logic behind getting long. Unfortunately, I was not aggressive enough here. I hesitated. So I covered my shorts into the swing high from the prior week, but I went off trade plan today. And this is where I went off trade plan. And I basically got my mind set that we were going to come in and test Friday's high and the gap fill. And I ignored this, what was a valid long entry according to my methodology of trading. So shame on me. I should have been long either at the close of this bar or certainly on the backside test of this bar, one of the two. And I took neither trade, and it rolled up. Obviously, that was a 15-point trade, and I was kicking myself. So what's the story behind this? How do I want to improve for tomorrow? Because you can obviously see where my entries were and where I missed, right? So a couple of things. I let my predetermined what the market should do. Guide my decision making instead of what the market was actually doing, right? Secondly, even though I was aware in the first hour, and I said it in the room, that if we don't close that gap by the end of the first hour, that we probably weren't going to close it, I still ignored my entry. So what do I want to do? I want to make a gentle shift and go, look, if we haven't closed the gap by the end of the first hour and you get a long side entry, go ahead and be willing to take the stop there is what I need to do in my trade plan. So obviously what happened was I saw everything that was going on. I just said in my head, I wasn't willing to lose the money, even though I had a great RR. I want to talk a second for what went behind that concept. When the market rips as it has, and I'm going to go back to the other chart really quick. When the market rips as it has, just the other day at swing low, we were trading near 2690. We're now trading at 2790 almost, right? 100 points off the low since Thursday afternoon into Monday morning, right? Mentally, it's really hard for me to go, yeah, I want to be uber aggressive on the long side of this trade, right? Most of the things that I know in my history of trading, I want kind of this seesaw price action to kind of go back and forth and kind of work its way back and forth in a zigzag type fashion, where I'm getting nice rotations down, nice rotations up. And so when I don't get that, right, for me, that's a personal hangup that I have to make that shift and adjust to, right? So what have I learned from today? First of all, buyers are probably going to be aggressive at key areas, meaning value, if let's say we gap up tomorrow and we're trading above value area high, we are most likely to get a response off of value area high. We're most likely to get a response around that 2772 to 2770 tomorrow, or just behind it for a move back up. And we are not bearish until we can get underneath and hold underneath 2760. Now, if we can get underneath 2760, we have a chance to actually come in, fill the gap, Dalton's gap specifically, and the gap from Friday, the settle price gap that are still open, right? But even once we're underneath that, failure to regain 2760 out of 2750.45 opens us up to coming back down and re-auctioning all the way down to 2730, where I expect there to be responsive buyers. I expect in general this whole value area right here, this whole thing, I expect this area in general to get tested from the backside, and for in general responsive buyers to be found back up. Additionally, what this tells me is unless I get below this area as a whole, meaning back below and holding below 2710 to 2700 area, the market has no chance of getting a downside extension. Now, that's not including any kind of fundamental or news event that would occur, but just from a technical standpoint for me, I've got to get below 2710 to 2700. So I want to focus in my note taking and in my preparation for the following day. I want to make sure that I'm focused on being aggressive on the long side, on rotations down, and being less focused on trying to grab the short side rotation. Two reasons for that. Shorts have just been getting smoked, including myself when I've taken shorts. Even though I've had them well placed, they've been difficult, right? And longs have been, the risk reward is just fantastic on them right now. And you have to assume that that behavior will continue to move forward until it ends. Okay, so, and then from the most simplistic standpoint today on ES really quickly, and I posted the zones, you'll see that the swing backside test, the swing high, I had it marked as a white zone, obviously responded. And then you can see the first test into 2775, it was the yellow zone. It's not as strong as a white zone. That's my second strongest zone, but you can see the initial rejection out from 2775 was actually worth 5 points to the downside. But before it actually just got, shorts just got squeezed at the end of the day, and they pushed them all the way up to 2784. And as of right now, we're trading back to 2779, but we still haven't fallen out of this zone. And probably 2794 is a logical location above the 2797. And it's ES is behind NQ at this point. NQ is just knocking on the door, ready to knock out new highs. Okay, let's go do NQ really quick. Again, the trading was better there. I knew that I had a key location once we traded into 60. I was not long out of the zone, and we pretty much drove straight out of this zone from opening inside of that zone, and it was marked as minor resistance, as you can see in this area. This was my key white zone for the day on NQ. When we pushed in here, I couldn't get underneath my last best buyer. So what I did is I modified that trade. And once I got underneath this last high bar, once I closed underneath, this is where my short entry was on the close of this bar. And that rewarded me very nicely with the roll right back down to 69.40. I covered the trade into 69.40. I did not, however, my plan was I wanted to get above this guy right here, which was 69.44 was the plan. And you can see, so I have a modified way of entering based on 5 range bars instead of 5-minute bars. And I limited back at 69.44 once we traded at 69.46. And I didn't get filled on the backside trade here. That really sucked because obviously that trade was worth 50 points. It's a lot of money. And I just didn't get filled, and they didn't give me another clean opportunity. They did not give me another clean opportunity at all to get a good short off in NQ or ES. I tried to short out of the backside. Actually, I don't recall how I handled it. I know I tried to take a late day short in ES, and I got up to 2 points in P&L on that trade. I don't remember what I did with NQ late in the day, but I had no key location up here. This is important from a trading standpoint, right? The zones are important because I know where I can focus my efforts on starting to look for price action that supports a contra trade, because I'm a contra trader, right? Obviously, once we got above here and we pushed above, a backside test of that 69.70 would have been good for a long. And the other thing that you would have wanted to look for while I'm touching base on this stuff, this is VWAP. And on the backside test, see when we clearly closed above VWAP, number one, look how much stronger the green bars, the up bars are than the down bars. We wiped out this downside rotation, which essentially took over an hour to get. and we wiped that whole rotation out in less than 30 minutes, 20 minutes to the upside, and it completely wiped out, instantly signaling that buyers were in overall control. The other thing that you would have wanted to use to see if, like, hey, are we rolling over, would have been to look for the 50-60 retrace. And the moment we closed behind that 62 retrace, buyers were back in control and they just pushed all day, right? So if we go back to the clues again, and I keep reiterating the same process over and over, if you go back to the clues over and over again, and I'm going to switch back here really quick to the other computer. And if we look at NQ, which I'll have in focus here for us in just a second. Let's erase all these lines. Okay, again, clearly opening above what I refers to the neighborhood below. Your first sign was there was really no resistance above, right? B, failure to close the gap, or the settle price from Friday within the first hour, and that almost always results in a push up. And so now I know for tomorrow, there's no chance of getting a big extension to the downside unless we trade below 69.4450, and we must trade back into 69.85, right? If we open up inside this range tomorrow, I know I expect open auction chop as traders try to push back up. Late traders will inevitably do that. And then if we do trade below 69.4450, I will start to look for tests back up for rotations. And where am I going to target for those rotations? I'm going to target this area right here to the downside. Any more than that would probably be very, very lucky at this particular stage of the game. So that's my 2 cents. Important notes, right? Number one, follow a process, follow a trade plan. If you cannot do that, or if you are not doing that, you're just asking to lose money. It's very hard to be successful without a process that you're repeating over and over and over and over again. That's what the zones are for me, is key location to look for trades. Number two, do not draw down. If you draw down, stop, look at what you're doing wrong, get back to making money paper trading, and then go back to real money trading. Just because you can paper trade does not mean you can real money trade, but if you cannot paper trade, you cannot real money trade. There's no question in my mind about that. Let's see if I have anything else, guys. I think that's about it. I'm actually tired now. It's 10:30. I got to be back up at 5:30, so I think I'm going to wrap it up for the day. I hope everyone made money. Anyone can learn to trade, but you have to follow a process. You have to have rules that you're willing to follow, and you have to be able to have a process that's repeatable day in, day out, which does not necessarily mean you get a trade every day, although most of the time you do. But if you're not following that process, it's almost impossible to have long-term success. My name is Simon. If you'd like to visit us, email me at tradertough, TRADERTOUGH, @gmail.com, and I'll be happy to extend you a 5-day pass into the room. Hope everyone made money. If you liked the video, please hit the like button. Have a good night, guys. Trade well. See you all tomorrow.